This is a topic on everyone's mind. The looming economic doom, and how is that going to affect the real estate market? Now, I know what you're thinking. Life is crazy, inflation is out of control, and now you want to talk about the real estate market? And to that I say, absolutely. What? I'm a real estate nerd. Come on. Because in times of uncertainty, which is what we're going to have very soon, this is when savvy investors and homeowners need to pivot and take advantage of what's to come. So whether you're currently holding on to a couple properties, you want to buy more, or you're just real estate curious, this video is for you. I'm going to break down some strategies that you're going to need not only to survive, but to actually thrive in what's about to come in the economy. Because the economy is going to start shifting. Because remember, it's not about trying to predict the market, it's about preparing for it. So with that being said, let's dive in. So how do we even know that we're going to be having some sort of a recession coming up? Well, it's fair to say that every single time in modern history that we've had a gigantic boom, it's always followed by a bust. Now, how bad that bust is, that's what we got to figure out. And we'll never really know until we're actually in it and it's over. But if you're following live data, following channels like this, we can get a pretty good idea of what's to come. So make sure you subscribe so that you're always in the know, because things change. A black swan event can change anything in a matter of a second, and you want to be up to date with what's going on. But on a general note, we know that if you raise interest rates to 40-year highs, it's going to have some sort of a consequence in the economy. And again, whether we have a mild recession, a medium recession, or a crazy 2008, that is yet to be seen, but we're going to have some sort of an unintended consequence, or if you're a conspiracy theorist, intended consequence from all of the hikes of interest rates. And we're starting to see some trickle down right now. I mean, we had the bank failure last year, which got bought out by the government, but that's only going to happen to so much of a degree. If that happens again, we're going to see what's going to happen this time. But we know the banks are under pressure for having so many bad loans, specifically given out to tech companies. We have tech companies so far in the United States laying off over 50,000 people just in the year of 2024, from January 1st to now of filming this video. Big companies like Google, Facebook, etc., 50,000 people have been laid off. We know the construction industry is at a complete standstill because builders aren't building because of high interest rates. We know people aren't renovating nearly as much because of high interest rates. And we know people aren't spending as much when it comes to groceries, clothes, whatever, services, because inflation has been so high, the cost of living is so high, while people's wages aren't increasing. Dude, I don't have to say anymore. This is all setting up for an economic slowdown. And I'll be the first one to say, I don't really think we're going to have a crazy, insane recession, not even close to 2008 style. I think the 2008 style madness recession is probably going to happen on the next cycle, maybe 2028, 2029, 2030, whenever that cycle finally lands. But I think the next recession cycle is when we're going to have a big one. But again, that is yet to be seen. But I think for this one, it's going to be more of a mild recession, especially for the United States. But nonetheless, we're going to have a recession of some kind. We're already seeing job losses. Everything is so expensive. People are spending less in the economy. It's only a matter of time before finally that data starts trickling through to the CPI reports and to the jobs numbers, etc., which we know they are lagged data, especially CPI. Because right now in America, it looks on paper like things are hunky-dory. Everybody's doing good. Everybody's making money. People are still spending. It's bullshit. If we go on Main Street and we actually ask the real people of America, hey, how do you feel about life right now? Can you afford it? Everybody is saying, no, I can barely afford it. I got to get a second job in order to pay for things, which is why we're seeing the jobs numbers in America. Like, oh my God, there's jobs everywhere. Everybody has a job. There's blowout job. Dude, it's people getting second and third jobs, you fucking idiot. But again, it's going to take time for that real data to finally trickle in before the Fed and the government goes, oh shit, all those jobs we're making, yeah, that's people getting second jobs because it's so hard out there to live and afford food and gas and groceries. So yeah, with all that being said, it's going to take time for that to trickle in. But if you ask people on the real Main Street, we're in a recession right now, especially in Canada, full-blown recession. UK, Australia, Germany, full-blown recession. It's going to take about 2 to 3, 4 months before those countries are in a, for sure, dedicated recession on paper. America is probably 8 to 12 months away from being an actual recession, GDP-wise, on paper. But again, we all know those numbers are lagged. By the time you get those numbers, it's already 6 months to a year ago. We're always in a recession, and we find out we're in a recession after the recession's over. That's how it works. But let's switch it over to real estate, which is what this channel is about. And what this video is really about is what's going to happen to real estate. Well, as I always said, if you were hoping for a real estate crash, a real estate correction, we already had it about a year ago. That was the bottom. That was it. You just missed it. If you think we're going to have another massive real estate correction, it's possible. Anything's possible. A black swan event can change anything, but it's very unlikely. Why? We know governments in major G7 countries are months away from cutting interest rates. Canada, 2 months away. The UK, 1 month away. Australia, 1 month away. Probably, by the way the data is looking, these major countries are months away. America, probably 4 or 5 months. September, the latest. What do you think is going to happen to the real estate market as soon as interest rates are cut? It's going to be madness. Millennials, Gen Zs, Gen X, they're all going to run to the housing market going, okay, finally, it's in. We're on the way down now. Everybody's waiting for this moment. And what happens when you have a bunch of people running at something when we have low inventory? We don't have enough homes, especially in Canada. America also has that problem. But countries like Canada specifically, we don't have inventory. We're at historical lows already. The housing market is already heating up in places like Canada and Australia and the UK. America too. But it's going to be insane when the rates get cut. Now, the reason why I say this is because it's important, because people go, well, Matt, if you're saying we're going to be entering an economic recession soon, people are going to be losing their jobs, can't afford things, how are people going to be able to afford a house? Easy. Here's the explanation. The people that tend to lose their jobs in an economic slowdown or economic recession are lower class and lower middle class. Those are the people that lose their job and can't find another job, or it takes like 6 months, 12 months to find another job. They're low qualified, they have no skills, don't have any college, don't have any high school degrees, which we're finding is, matters less and less as we go into 2024. But still, those are low qualified people. They don't have a good work ethic. That's why they're making fucking $19 an hour by the age of 38. Those people weren't buying homes anyway. They were never in the housing market anyway. Those are our renters. And they're going to be renters probably for the rest of their life. And they've always been renters. So when they start losing their jobs and we see massive layoffs in manufacturing and construction, it's usually the lower sectors. Now, middle class people will lose their jobs as well. It's going to happen. But middle class people tend to be able to find another job very easily. It might be in the same industry that they lost their job in. It might not be, but they have experience. They have time in a company. They often have college or university. They're going to find another job. It's going to suck. I'm not saying it's going to be easy peasy and life's going to be good and they're going to find another job in 2 seconds. Life's going to suck. 2 weeks, a month, maybe 2 months. But they're going to find another job. They're not going to lose their home and go bankrupt. They're not going to be able to not buy another house in a reasonable amount of time. Middle class are going to be just fine. They always are. And if we go back to other recessions to kind of prove this point, look at the 90s recession, a very slow economic time, slow growth, tough to find a job for lower class and lower middle class, tough to find a job. But what happened to the real estate market during that early 90s slowdown recession? Nothing. The real estate market kept its value, hummed along, slowly grinded up 2%, 3% appreciation. Nothing crazy, but the real estate market grinded up while the economic cycle went down. It was tough. Okay, and then it got better in the second half of the 90s. We all know that. Dot-com bubble, peak. Life is good. Massive stock market crash. Economic slowdown in the early 2000s. What happened to real estate? Nothing. It grinded up in preparation for 2006, 2007, 2008. What happened in 2008? Massive recession, okay? But that was a real estate specific recession backed on mortgage fraud and low credit scores. That was a real estate specific recession. So yeah, real estate got annihilated. In America, only countries like Canada, the UK, Australia, nothing happened. I lived in Canada. I was working in Canada. I was buying real estate in Canada during the aftermath of 2008 recession. Nothing happened to Canada. That was an American-specific, real estate-specific recession. Anyway, fast forward to the pandemic. Okay, we had an economic massive shutdown. It was only like a month or two, let's be real. But it was a shutdown. People went nuts, lost their jobs, got them back like 2 months later. What happened to the real estate market? Exploded. Okay, so what I'm trying to say is when there's an economic recession, it almost never means also a real estate correction. They almost never align. So that's just the point I want to make, and backed up with data. So to wrap all this up, you're probably asking, okay, Matt, when are they going to cut interest rates? When is this real estate cycle going to be starting off for the next boom cycle? When are rates going to be cut? And they're going to be cut when we finally start seeing massive job losses all over the news, when inflation is coming down, when people are not spending as much in the economy, which I already touched on. That's what people are doing right now. Nobody's spending shit. Fuck these reports that are coming out and being like, the American consumer is holding up really well. They're spending. No, they're not. It's lag data. The CPI data is always like 4 to 6 months lagged. So the data you get today, that was 6 months ago, but they're saying it's today. It's just the way the numbers work out and how they calculate them. It's bullshit. And all the job gains, like I said, that's second job. People getting second jobs. But they can't factor for that. They're just seeing the number of jobs total. Oh my God, America's doing. No. Is people getting a part-time job at night. They're working for Uber. They're doing whatever at night after working all day just to pay for life. Eventually, that's going to crack. And people are going to go, fuck this. I'm not working 12 hours a day, not seeing my kids. My back is killing me. I can't do it anymore. I can't do it anymore. I'm going to drop that second job. I'm going to downsize. I'm going to sell my house. I'm going to leave my rental apartment. I can't do it anymore. And that's finally, when that shit starts hitting the data, that's when the government's going to go, oh shit, we overdid it. It's too restrictive. Cut, baby, cut. And if you don't think they're going to cut, and if you don't think they're going to cut heavy, we'll see. But every single time in history, every single time, let me say that again, every single time, the government has hiked interest rates a lot to a meaningful degree. And mind you, what we just did has never been done before. Going from 1% interest rate in America to 7 in a 1 year, that has never been done. But when it has been hiked quickly like that, every single time, that when they start cutting, they don't cut slow like they're saying, oh, we're going to hire for longer and then we're going to cut slow. Every single time, hold, not for longer, slash, almost right back to where we were. Every single time. Will this time be different? I don't know. Maybe. We'll see. But as you know, that's one of the worst words in economics and investing is this time it's different. It's never different. It's more likely they're going to slash those fucking rates right back down to 1% because they're going to break shit. And they're going to go, fuck, we broke the economy. People are losing their jobs left, right, and center. Inflation is actually too low. We have deflation now. Nobody's putting money anywhere. Shit. We got to cut rapidly. That is a much more likely scenario than higher for longer, cutting slowly, no cuts at all in 2024. Data says that's not likely. And again, when we're investing, it's kind of like gambling, but sophisticated gambling based on data, based on history, based on past trends. And all the data says they're going to be slashing. They're going to be slashing because they're breaking shit. Again, if you interview people on Main Street, the real people, the real middle class, times ain't good. All these reports that keep coming out, the economy's killing it. Pfft. Who? Where? People are hurting like crazy. Anyway, that'll hit the data soon, and that's when they're going to cut. So what does that mean for you as a real estate investor? Get prepared, baby. Again, if you're buying good quality real estate in a good area with strong GDP growth, strong job growth, we don't fucking care what's happening with the economy. You think I care as a real estate investor, as a house flipper right now, buying deals under market value? You think I give a shit about what's going on truly? No, I'm just using it. It doesn't mean I stop investing in real estate. It means we pivot and we change. Instead of getting deals on 70 cents on the dollar like we were doing during the good times, now we got to buy them at 50 cents on the dollar. Maybe getting a little bit less deals, but we're being more strategic on who we're targeting to make sure we're getting a real discount. Yes, 50 cents on the dollar. I'm buying properties for half of what they would sell for on the real estate market with a realtor. Eventually, because nothing's fucking selling with a realtor in America these days. It takes forever. In Florida, the average days on market is 200 days. So when the house eventually sells someday for $400,000, yes, I'm buying that house at $200,000. And then I'm selling it with a realtor for $220,000 just to get it off. And then I'm listing it with a realtor and I'm selling it for $320,000, $330,000. Quick sale. Just get rid of it. Pocket a nice 50, 60, 70 grand. Yeah, that's what I'm doing. So that's how we invest in real estate during tough times. We just change our approach a little bit. We don't stop investing like an amateur investor. Oh my God, I can't invest in real estate. That's because you don't know how to invest in real estate. You're investing in the wrong areas. You're doing the wrong strategies. Anyway, that's what this channel is all about. So if you want to learn more about investing in real estate and growing your wealth, smash that subscribe button, and I will see you in the next video.